David Burrows of Barometer has brought with him 3 fresh top picks on this edition of Market Call. We were discussing earlier JP Morgan, a past pick. You like that.
Yeah.
But you're also a big fan of Bank of America. Why?
Yeah. So I think the last bank we spent time talking about was Citigroup because of its global reach. Let's talk about Bank of America as a more domestically focused U.S. bank. So Bank of America has about 40% of its business coming from corporate and consumer banking in the U.S. They get about 20% of their revenue from wealth management, which they've done a very good job at with Merrill Lynch. We believe capital markets are going to remain strong, so the investment business should be very good. Business conditions are improving in the U.S. Deregulation is something that is likely to continue. There's a possibility of some tax relief, but most importantly, we think that higher interest rates are going to give them an ability to make a better net interest margin. So they've been getting a return on equity of about 7.5%. We think that could go to 10%. They can increase the amount they're paying out by way of dividend, and it's trading at 1 times its book value, the liquidation value of its loans. These U.S. banks have traded at 2.5 and 3 times their book value at good periods in the past.
That's what Canadian banks are presently trading at.
Exactly. So I would like to pay liquidation value for a great global franchise with a clear path in many ways to better profitability and better return to me as a shareholder.
Top pick number 2 sounds like it's tied to your optimism about global growth. Caterpillar.
It is. So look, I always look for the company that's been able to do well through a tough environment. Caterpillar, of course, the seller of big, heavy equipment, one of their biggest end markets has been mining and resources, and of course, they have been dragged and kicked through the dirt for the last number of years. To put a point on it, 80% of the revenue from that sector has just been replacement parts for the last number of years because nobody's buying heavy equipment. The thing is, though, this equipment wears out and has to be replaced and has to be maintained. So Caterpillar was able to continue to make money through an enormous trough in the resource sector.
Is that estimated PE of 823 times accurate? That seems a little high.
Yeah, it's. I think that number may not be right. This company has seen its estimates revised 50% higher so far this year. So it's got the fastest earnings revisions of any company in the S&P, and it's a company that benefits from coordinated global growth. If the construction industry picks up, which it is, if the resource industry gets a little bit better, if global growth is a little bit improved, this company has been able to benefit. And the fact that we went through the downturn that we did and they continued to make money tells you how resilient the business model is.
The theme continues with top pick number 3, Dow DuPont.
It does. So industrials and chemicals are a sector that we're quite interested in. Dow DuPont have combined to become the largest chemical company in the world. They will likely break into 3 pieces over the next year. But let's just start by saying this is a company that is completely attached to the global economy and benefits as the economy gets better. However, there are billions of dollars in savings that they can generate in the next couple of years that will generate a much better return on their assets. You could unwrap lots of value as they break up the company. And this is a company that we recommended about a year ago on this same show, and it just continues to unfold.
But I can't imagine the investment thesis is on the trio of individual divisions breaking up.
No, there's an improving global economy. That's good for pricing and for demand. Second, you've got savings, cost savings, which are significant. Third, you can unearth value from breaking the companies up.
David, always great having you with us. Thank you.
Thank you for having me.
David Burrows is the President and Chief Investment Strategist at Barometer Capital Management. That's it for this edition of Market Call. If you missed any part of the program, BNN.ca has your back. The Encore presentation airs Monday through Friday at 10 p.m. Eastern, 7 o'clock Pacific. And we're live Monday through Friday, 5:30 Eastern for Market Call tonight. As always, please consult a qualified financial advisor before making any investment decisions. On behalf of Andrew Bell, I'm Michael Hainsworth. Thank you for joining us. Yes, Andy is back tomorrow. We hope to have you with us then.